The Commonwealth Bank cuts rates once again. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Gerard Coburn discussing the Commonwealth Bank's further rate cuts for savers. Now, the idea of, well, who remembers back when you could get 2% for your savings, or 5%, or 7% for a term deposit? I mean, that's crazy talk. I'm sure that never happened. That was just a fantasy. So the Commonwealth Bank hits savers with further cuts. Australia's largest bank has dealt a blow to savers, implementing further rate cuts that are more than the recent interest rate carving by the central bank. Well, our cash rate is, I'll bring this up here, 0.1%. I mean, it's a joke. It really is. Now, I'm getting on my savings 1.75%. So I'm steadily putting money in Rabobank, hashtag not sponsored, just to get their like bonus interest. And then I'll move it back to my ING where I can get 1.35. And I just need to make a certain number of transactions a month and put money in there a month to jump through these hoops, which I kind of don't mind. It's forced me to, well, for a while I've been looking for a reason to get my business banking and my personal banking separate. I've been with the Commonwealth Bank, so I split them up. You don't want to have everything in the one basket, guys. You want to make them work for it. Because that's why the banks will do loss leaders to get you in, just because they want to get all your business. The more products they can have under their control, the better they are. That's why some people will get refinancing deals for a couple of grand to jump over. You know, they'll happily absorb that to keep your business. Anyway, back to this. Let's have a look. Commonwealth Bank has dealt another blow to savers by slashing savings rates on deposit accounts by more than Reserve Bank's recent interest carving. The country's largest bank and, one of the top market cap businesses in Australia, at least last time I checked, the top. Not a good sign, eh? The country's largest bank on Friday morning clipped savings rate by 5 basis points on its standard and conditional deposit accounts. The second time CBA has cut rates since the central bank announced further monetary easing measures on November 3rd and included lowering the official cash rate to 0.1%. CBA, since November 3rd, has lowered the savings rate on deposits accounts between 20 and 25 basis points, which is more than the 15 basis point reduction prescribed by the RBA. I mean, you're not even going to get match inflation here. I'm going to bring up the RBA website, guys, and let's see here. I mean, they're saying the inflation rate is 0.7, but remember when they were saying that inflation didn't go up because all of those people that saved money on the free childcare? I mean, it's a bit of a joke, really. It is. So you're not even going to beat it. CBA's standard NetBank Saver account now attracts a 5-month this is their introductory rate? A 5-month introductory rate of 0.55%, and then changes to a measly ongoing rate of 0.05%. I mean, this is just ludicrous. That's nothing. Literally, even that, the introductory rate of 0.55 is nothing. You know what this is. Here's the problem. You're going to get people here in Australia that are seeing this. So what do Australians do when they're getting nothing on their savings? Where do we put our money in? Go on, I'll have a shot of coffee, and you let me know in the comments. If you guessed property, you're right most of the time. So, I mean, is this going to have an inflationary effect on property? There's a question I put to you to consider. With rates so low, if your money's sitting there essentially worthless, and maybe you're thinking, okay, well, I'm literally losing money on this, I might as well put it into property. Less risky than stock, perhaps. It's all feels like it's working in tandem, doesn't it? CBA's conditional Gallslaver account offers a maximum rate of 0.45% for balances under $50,000. How generous. While balances over the threshold garner a rate of 0.5%. The maximum interest is only obtainable if the savings balance increases each month. CBA is now on par with ANZ in offering the lowest savings rate of the big four banks. According to Rate City, 70 banks across the industry have lowered saving rates since the RBA cut, with ING offering the highest ongoing rate of 1.35%. Yeah, I mean, that's a joke, isn't it? 1.35%. Barely above what they're saying inflation is at the RBA. At CBA, you're losing money. You're getting essentially, with inflation, your money is losing value. You're barely keeping above it at ING, probably because their costs are a lot lower. Rate City Research Director Sally Tyndall said CBA's most recent cut should prompt customers to shop around for a better deal. CBA has snuck in a second cut to interest rates right before Christmas on its popular savings account, she said. While there are better saving rates on offer, sadly, CBA isn't the only bank hacking away at rates. Banks have been forced to shave rates due to the low interest environment that has been fueled by the economic downturn sparked by the pandemic. Lower rates place more pressure on banks' net interest margins and push up the cost of paying interest to customers. Ms. Tyndall noted Australians had squirreled away more than $100 billion in savings since the beginning of the pandemic. The banks are jam-packed full of cash. They can't afford to pay interest on, she said. Extra cash in the bank is a headache for them. As a result, banks are cutting corners every way they can to balance the books. Rate City said the average ongoing savings rate in Australia is 0.42%. Again, inflation, CPI, is 0.7. So you're literally losing money by sitting in one of these savings accounts, guys. It's essentially, this is negative interest, essentially. And I mean, it comes down to risk profile. There'll be a bunch of Australians that consider the stock market too risky and will go into property. I bet you. I mean, that's our default. It's what's on TV. It's what we're obsessed with. Rival Westpac is offering a lucrative 3% savings rate for people under 30 for balances. Oh, okay. 3%. Balances up to 30 grand. Maybe I should open one account for all 5 kids and put 30 grand. Maybe I will. What do you reckon? Can you do that? Would that be worth the hassle? Would that be worth the hassle, everyone? Okay, so let's have a look here at some of the TradingView data for CBA. They're sitting at $82.53. Right back at February, they were over 90 and it crashed down and it's steadily climbing back up. The technicals are telling us to buy with the CBA at the moment. Their dividend, what's that full year paid? Negative 7.62. Dividend yield is 3.5. Dividends per share are 2.98. Let's have a look at some of the ideas that people have. Here we go. We've got long, last 30 years, Big Four. Australian Big Four banks look disgusting. Daily analysis, Commonwealth Bank of Australia, short. So we'll look at a few here. So CBA long, after breaking out of base. Entry 83.48, stop loss 81.84, broke out of a rough pattern with above average volume. And let's see how he's going there. There you go. So we'll have to see. His stop loss may kick in. So Australian Big Four banks look disgusting. 30-year trend broke in March. Not sure if we retest March lows, but at least another 5-10% to go. Okay. And here's the daily analysis. Hi friends, the daily chart of this market shows that with a high probability that it will experience downtrend in the coming days, but it is also better to be vigilant on the change of direction towards the reverse. Please subscribe to receive more analysis. Okay, how do I give him a cheer? I'll get, ooh, wait a minute, no, wait, that costs money. Okay, I'll give you a like. I'll give you a like. There you go. So let's see the new bars. We'll load them. And there you go. Bounce up. Well, he was going short. That doesn't look like it's going short. What do you reckon? Anyway, guys, so there we have it. There we have it. CommBank has cut rates to below inflation. Where do you have your savings, guys? Do you have it all in one bank, or do you split it out because of the guarantee? Or have you taken it out of the banking system entirely? Have you become a gold, silver, or crypto bug? Or do you put them in a few different ones to try and eke that little bit of savings? I'm finding Rabobank is just so primitive with their technology. But one of the advantages of it being primitive and annoying is that it makes it difficult to spend the money. So we'll have to see what happens, guys. How low do you think they will go? We're pretty much getting essentially negative interest now with inflation on some savings accounts. Fantastic. I wonder what that'll do to property. As always, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays or Teespring, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I will see you all next episode. Bye for now.